Okay, good morning everyone. Thank you for attending today's webinar. My name is David Dubé. I am the principal of Polaris Trading Group. And thank you, Patrick, for that introduction. Do appreciate it. We're going to do a live trading event here today, and hopefully we'll get some trades for you, focusing primarily on the NQ today and the S&P ES E-mini. All right, before we get to the charts and everything, and again, Patrick's already gone over the risk disclaimers. I'll just mention it myself, that the NFA compliance rule 2-29, simply in summary, past performance not indicative of future results. Make sure you're trading with money you can afford, and that's great. All right, I just want to give you a quick background for those that are new to the webinar here today and don't know who I am. I've been around for 30 years. I've traded at investment banks, including Shearson Lehman Brothers years back, as well as United Bank of Switzerland. And I am currently running the education room at Polaris Trading Group, and we in a newly formed commodity trading advisory service, CTA service, as the Polaris Trading Group Capital Management. So this builds upon what we've begun here at Polaris Trading Group on an educational basis, and now we're expanding into a CTA program with what we do. So that's going to be forthcoming in the second half of 2017 here. All right, just to give you a quick outline of the benefits of working with us here at Polaris Trading Group. All right, and this is our mission, four-pronged mission statement. Number one is we want to help you improve your decision-making skills. All right, we want to help you learn new empowering habits. You may already have some sort of bad habits just ongoing, and we want to help you, make some corrections to that and start learning some new empowering habits. One of the things, I get questions on, and why is the market doing this and why is the market doing that, and they don't understand institutional activity and the algorithms and all the stuff that goes on today. So what I try to do for our members and subscribers is to help demystify the market action. It's really not that mysterious, but you need to know some fundamentals about price action, order flow, things like that, and which will help work you into becoming a more informed trader. And that's the fourth prong for what we look for and what we try to teach everybody. We want you to be an informed trader. Now, informed means knowledgeable, all right, about market activity. And so the way I look at the markets participants is simply in two groups, the informed and the uninformed. And just because somebody out there is trading a lot of money does not necessarily mean they're informed. All right, so and we have a lot of folks that don't trade a lot of money. They trade their personal money, and it's the monies they commit to this market is not huge, but they're informed, and they're able to build their accounts up. So informed and uninformed traders, and that's my four-pronged mission for everybody here. All right, and there's more to what we do, but we'll leave that for you to explore as a visiting guest. All right, let's get to the charts, and we'll just describe what we're seeing here. Now, again, I use, let me just bring a couple things in first. Every morning I do a quick briefing. I write a daily trade strategy for everybody in the morning. Everybody should see the charts now. Let me know if you don't. I write a daily trade strategy each morning for our members and subscribers, and it outlines what our game plan will be for the day, various levels that we're going to be looking for to trade from, and what potential bias is for the day. So we use our profiles. This is all on Sierra chart currently right now, and it does a great job in displaying what we want it to display and to help give us an outline first thing in the morning. All right, so we always start off with the profile and get our game plan, have an understanding of what our game plan will be and what our target levels and so forth. All right, so once we get through that, we just start on right into the open range, and let me just move the charts back around. All right, and as you can see here, so just to give you a quick description, on the left-hand side we have the S&P E-mini. All right, and again we can see we're in a downtrend type condition today, so we're going to be only looking for sell side trade setups here today. All right, and one of our trademark setups is what we call premium and discounts. And a premium simply is a short sell in the context of a down move, whereas a discount is a long setup in the context of an up move. Okay, so that's kind of the broader outline of things. The details of each setup and how we approach it, manage it, risk, etc., is all outlined, in our materials. All right. So if anybody has questions along the way, feel free to ask. I'll try to get to them, throughout the session. What we like to do here in the early part, which is the busiest part of the day, is just kind of stay focused on the trade. I will periodically highlight levels and zones where I'm looking to take trades from, and then again our membership keeps watchful eye on those levels, and our members trade for themselves clearly, as well as I do. And I'll put my trades up on the screen as they develop as well. All right. All right. So over here on the left, just to give you again reference points, when you see some arrows pointing down, that's going to point to a potential short sell premium condition. And as you can see here on the S&P on the left, all right, we had a condition to sell 2 contracts or 2 units at 32.75. All right, that's also already gone on to make a couple levels here for targets as a successful short trade, all right, for our members. In the middle here, we're looking at the NQ, okay, the NAS, and as you can see here as well, all right, we've had a series of premiums here this morning, all right, just prior to our webinar event, and again, offering opportunities to take shorts. The last one, which is currently active right now, is from the 56.88 level. Now this particular setup automatically paints the levels: entry, stop, all right, a risk-free level, and then 3 automated target potentials for the market to achieve. All right. The time frames in these charts right now on the left-hand side on the ES, we're using intraday. For an execution chart, we're using a 750 tick for the ES, and we're using an 840 flex Renko for the NASDAQ. Okay. And then on the right-hand side is the Sierra chart's number bars, or footprint chart, some of you view it as. And again, we look at our order flow based upon what's going on there. All right. All right, should not be confused. Again, 750 tick on the left-hand chart on the ES, and then we have a Renko chart in the middle for the NQ. And it's just the footprint number bars type chart over here on the right-hand side. All right. All right, good. All right, so let's, now you have a little bit of a lay of the land, and we'll get right into what we're looking for in terms of trade setup. So again, we're on the sell side this morning. I mentioned that before we started the webinar to our group. We begin at 9:15, and we do an early pre-market brief, get everybody established on what we're looking for. So coming in this morning, we were looking for just to sell short bounces, all right, to get in alignment with the down move, and that's what we're currently working on right now. Okay. The 3 instruments we normally trade are the S&P, NQ, and we'll put in crude oil here. Over here to the left is crude oil. Okay, so I just switched the charts, crude oil. So those are the 3 instruments we focus on. All right, and it's a pretty good complement for most traders, what they like to view. Okay, so all these screens are customizable themselves, but I have everything customized for our members, for those that end up getting the software. All right, so let's just focus on what needs to be, what levels are next in line, and I usually switch the charts back and forth for our group throughout the morning. All right, to give everybody perspective. All right, prices of now here in the NASDAQ and in the NQ in the middle retraced all the way back down to the lows, just about. So we should look for a reaction, a buy reaction coming off the 62 level. There's a high volume node from the session prior in that area. So we should look for at least a some attempt to hold yesterday's low. Failure to do so, okay, we have some downside targets here, this purple line and this white line. So failure to hold there would suggest the market goes a bit lower on the auction down to the 38s. All right. Now this is on another screen. All right. So we keep the screen clean on our execution charts, and then we refer to the big charts as we go. All right. So let me know if you have any questions along the way. I'll try to answer them as timely as I can. All right, we'll stay focused. All right. Again, members in our current room, feel free to post in that room. I don't know if you guys can see it. Let me know if you can see this chat box. Does everybody see this chat box in the webinar room? You do? Okay, great. Thanks. All right, I just wanted to show you, this is our chat box that we use on our iLink system, and again, we have you know, our members converse with one another. I know Patrick mentioned it was a pretty good group, and I definitely concur with him. So there's a lot of interaction between our members. All right, we are all focused to do the same thing. All right, focusing on trade setups, opportunities, etc. All right, so it's a very good community. And by the way, everybody gets to see one another. All right, so you can see here. All right, some platforms don't allow you to see who else is in the room. I make sure everybody else sees each other, knows who they are, and many of our members actually work together. All right, throughout the trading process. All right. All right, so while we're waiting for a trade setup here to jump in on, just answer a couple questions as they come about. The indicator down below here is a modified CCI, Commodity Channel Index. All right, it is a modified version. It is our own version. All right, our own coding, and again, a lot of people have found it difficult to use traditional indicators like with Renko charts, and I've been able to code them up where we get some very good signals with our I have a great programmer that does a lot of work with me over these 3, 4, 5 years, and he's kind of a wizard. So he's able to pretty much do whatever I ask him to do in the development process. So that's his modified CCI. All right, and we use what we call a CCI crossover system, which is effectively our premium and discount system for short. All right, all the software here is available on Sierra. This is Sierra we're using, and everything that you see here and more that you currently don't see is all pre-templated, okay, for our members. So as a new minted member of the community here, PTG community, you get an opportunity to take a 30-day trial of the software, but only as a member. I discontinued guest trials a while ago. It was just very difficult to administer. But as a new member, you get a 30-day time to kick it around. All right, so and everything's pre-templated for you and fully explained. The order flow chart, or the number bars here, the footprint chart, factors in because what we look for is when we're coming into a level or a setup area. All right, we want confirmation of what the order flow at that moment is doing. All right, I don't stare at the order flow every moment, every tick, but we do use it as a final filter to you know, to help us execute a trade. All right. All right. So as you can see here, we have a little premium setup developing right now. Again, 52.82 up to 87. Now in this case we have about a 5-point, usually have a 5-point stop, all right, and it has to trade back down through 82s at least for a trigger. Now the market's gone quite a distance here to the downside, all right, so we're a little bit cautious on new shorts at this level. All right, what other questions you got here? Do you have any face-to-face events or meetings with other members? As a member, I give everybody ample time, one-on-one, if they need it. So yes, we actually have periodic meetings as a group, but also definitely one-on-one. So if you feel as though you need at some point a little bit more higher touch, all right, to get you over some humps, all right, we definitely do that, all right, for our members. Flex Renko, yeah, I use Sam, I use a 420 on the ES Flex Renko. I don't currently have that logged in here, all right, on this particular chart. All right, so let's focus here. All right, let me see if I can sell one. All right, there we go. We got filled on the NQ here, all right, at 82 on the short. Let's see if that plays out. We'll look for 77. Stop is 87. And again, stops do occur, guys, all right. They happen. It's part of the game, all right. And let's see if we can get a move out of this. Again, we're just following some basic rules of our premium discount system. And our first tag will be at the 77. All right, see if we can get a nice little positive trade on this. In terms of calling out trades and whatnot, this is what I do, as you're seeing it right now. I let you know when I'm in a trade. I highlight when there is an opportunity for a trade. All right, the system generates there it goes. All right, bought it back plus 5 points. All right, so we were short at 82, bought it back at 77 plus 5 points. So that's $100 per contract. All right, we just did a single one there, just as a demonstration. All right, so I'm sure our members took that trade as well on the other side. And all right, so that's what we like to do. We like to start off early in the morning, try to get a trade or two under our belt. Okay, and then let me just show you also. We got a premium setup here on S&P on the left-hand side. Here's a little screen, all right, for our trade setups. All right, we call this our Scanalyzer dashboard. And as you can see here, we're monitoring the three instruments. Okay, now we have a capability of monitoring multiple instruments on this, as many as you really want to monitor. But we're only monitoring our three key ones that we trade here. And what this whole little dashboard does for us, now this is set up on another screen, but it automatically monitors and scans for our trade setups. So if you're focusing on, crude oil, for instance, right? So if we put crude oil up here, okay, you can see crude oil's rallying up here a little bit. So if you're on crude oil and you're paying attention to crude, but you also want to trade, S&P, all right, and you don't have enough room on your screen, say for instance, well, the Scanalyzer does that job for you, right? It is scanning for the setups that we have it programmed for, and it will highlight you visually and audibly, all right, automatic. All right, so if you have limited screen space, all right, this is a great tool to help kind of keep you, if you're distracted by doing something else, the tool's going to, the Scanalyzer dashboard will actually continue to scan, does not take a break, all right, and and it's a great tool. All right, so I just have this a little bit out of view. It's actually in my view. All right, are you trading live or sim? No, I am trading absolutely 100% live. All right, here it is right here. All right, this is a live Infinity account, PTG Capital, and as you can see, that trade we just took. All right, short one at 82, back at 87. All right, and there's your $100 profit. All right, Richard. So we do trade live in the room. All right, I'm probably one of the only educator, maybe one or two, that actually trades live. All right, it is not simulated. All right, let's see. Let me just get a couple of the questions here. How often do I change the tick speed on the S&P? I do not. Okay, we don't change the speed of the S&P. All right, I've back tested the 750 tick for many years now, and okay, and I found that, at least for my purposes of what we look for, the 750 tick is the best. So I don't change it. As the volatility in the market changes and so forth, it's been very slow, as everybody knows, the first half of the year, in very narrow ranges, and one would kind of be enticed to tighten up or lower their tick sizes in order to get more trades. I don't. I just wait for the market to, finally come back around, which it typically will at some point. All right. Let's see. I don't have time to trade all day. Are you getting decent results in the first 2 hours, enough to make it worthwhile to get a few trades? Yeah, Richard. Good question. I think the most activity comes in the first half of the day. All right, and not all of our members will be trading all day long as well. All right, some people have they have part-time jobs or so forth, or off hours, things like that. So members come in at different times. I do find that, though, the most volatile activity or movement will occur all right, during the morning session. Yes, as one of our members, Kevin, just mentioned here in the other room, all right, he'd say that some of the best setups occur primarily in the morning. All right. Let's see. Hopefully I'm getting to your questions here as we're monitoring, waiting for the next setup. Mike, what does MVA stand for again? Oh, value area? Yeah, we use value areas, absolutely. All right, profiles. All right, I don't use range bars. All right, the Renko kind of in and of itself is somewhat of a range type bar. But no, I don't use range bars. Some people do. Nothing wrong with that. Yes, we definitely use value areas, though, as more of a guideline. All right. Forgive me for asking, other than a 2-week trial, is there a special for Infinity clients? Well, that typically, Sam, the normal trial period is 7 days. I extend it out to 2 weeks. All right. And again, and the reason why I like to extend it out to 2 weeks, you'll go to perhaps some other places where they'll only give you a few days, or they charge you actually, even for a few days or a day, or day passes, those type of things. I find that the market, you need to, in order to experience what we do here, you need more than a day or two, because it's almost like taking a snapshot. If you only go for 1 or 2 or 3 days. But if you go over a period of a couple weeks, you have an opportunity to visit and see a lot of the things that we do in kind of different types of markets. All right, so yeah, so I extended to 2 weeks. I don't know if an Infinity does anything beyond that. for their guests or members, but that's what we do here. All right, and again, as a new member, just keep in mind you get the trial of software for 30 days. All right, so you really kick the tires, and again that's something that again I want to make sure that new members are one, educated in what we do, and then have the right tools, and then be able to work with the tools before they make a decision to purchase them. Yeah, absolutely. Hold on just a second, Patrick. I'll get that to you right now. All right, give me 1 second. Just gonna move it over to the other screen. Okay. Okay. Copy. I'll post it in the box. Does everybody see that link? That'll be the free trial link. Okay, good. Alright. Okay, great. Super. You should see the link in the box. If not, Patrick, maybe you can retype it. Yeah, so the next question I'm just seeing here is regards to 10:30, which is also referred to as the initial balance between 9:30 and 10:30 Eastern Time, and that's a profile term, market profile term, and typically the initial balance sets up the range for the day. So at 10:30. Actually, what we do, let me just show you here. All right. Here is the here's a chart of the NQ. Okay, and you see this little notation. It says here equilibrium time on the chart. Well, what that means is that's the 10:30 marker. All right. So equilibrium simply means that the first hourly initial balance is in place. And generally, if it's going to be a range type day, okay, we won't get too much further weakness below the first hourly low. All right, that first hourly low tends to offer a reversal point. Okay, so I think that goes to your question, Lori. All right. And though it begins, and if there's further weakness in a day like today, if there's further weakness below that 10:30 low, and prices can't recover above that for any period of time, then there's a potential for a continuation trend day. All right, and that would portend more weakness. So typically, a lot of traders will use that 10:30 marker as an opportunity to either cover existing shorts, right, or maybe establish a new open long trade against that. All right. Do you use 750 ticks? The NQ, if you're going to use a tick chart on the NQ, we range. I believe most of our traders will use like a 250 tick. Or a 377. All right, something like that. Robert asks if there's you have an existing Infinity account. If we go with the program, is there any additional cost in using your setup? The only additional cost, Robert, would be number one, the membership, quarterly membership, and if you decide after the 30-day trial of software and you want to get the software, there is a cost to the software that is separate than the membership, but that cost of software is pretty modest, and we offer a leasing program of 10 months or we do a discount if you decide to purchase it up front. As well as once you purchase the software, there is never any additional cost, ever. Okay, so some of our members that have been with us now for a better part of 4 years, as we've developed the software, have never seen an upgraded price at all. Okay, so hopefully that helps. All right, again, we try to make everything within a reasonable cost for everybody. I know everybody is cost conscious, as I am, but we have to look at what you're getting for the cost, again, to look at the value of what you're getting versus, you know, just the cost. All right, and all right, so that's something, it's always something to consider, but we want to make sure it's within the reach of everybody. Can you explain the 8.4 Flex Renko? I'm using a standard Renko with Sierra, and that is unfamiliar to me. Yeah, Mike, there's some very good explanation that Sierra has on their support forums, on their documentation about the Flex Renko. All right, it's probably a little bit beyond the scope of what we're doing here today to be able to kind of explain all that type of stuff, but I would offer you just go research that a little bit, and you'll be surprised what you can learn. They get some excellent documentation. All right. Yeah, Yagma, we put up a link there. All right. I don't know if you guys. I'll post it again. You should see that link to the free trial. How difficult or is it easy to learn your system? That's kind of a loaded question. Here's the thing, Abe. All right, anybody can learn this. Okay, anybody. What I've done here with our methodology is, you know, given my 30 plus or so years experience in various styles of trading and so forth, what I believe I've done is I've taken kind of the best of what's out there, and I've also, in a way, created it where it is really not that difficult to understand. All right, if you're willing to do some work, all right, you'll gain a lot of knowledge, and that knowledge, of course, will, you know, the goal there is to translate that knowledge, you know, into profitability for yourself, or becoming a better trader, more informed trader, those type of things. So if you put in the time, I just don't think it's that difficult. But like with anything, there are, you know, with any complex system, all right, you know, and again, the marketplace is, you know, a complex type ecosystem. You don't need to know every part of the ecosystem, but you need to know some of the core fundamentals of the ecosystem. And that's what I try to make sure everybody is, you know, up to speed on, okay, with what we teach here. All right, so it all kind of depends on how much, you know, work you're willing to put in. But I know our members, you know, find it satisfying. All right. If you're looking for somebody, if you're on the search for somebody just to sit there and call out trades for you, you know, unfortunately that won't be. You'll be disappointed here. All right, because I don't sit here and call out trades every moment. This is why I have the Scanalyzer here. All right, they do a lot of work for us, and I've coded the computer to generate a lot of the signals for us. So that alleviates me from actually calling signals, but it allows me to do something better for everybody. It allows me to keep everybody focused on what to be looking for, and then let the computer do the work to give us those signals. All right, so we have a low in place here. All right, let's just kind of catch up on where we are. We have a low in place here right now, and again, that initial balance low that Lori had asked about, and we've taken out some prior highs, so we got a little retracement bounce. Now, this low pivot here, I'm looking on the NQ right now. All right, this low pivot here on the 82s, all right, is now currently marked as our support marker. All right, and then you'll see up here the market's rallied back up to the chunky part of the profile. All right, so we're going to be looking to possibly make a level sale. Okay, that's different than a premium or a discount, but a level sale near to the in the 5700, say 5703 zone. All right, and that would be a level sale. That would be what we call a non-standard sale, a non-standard trade. All right, pullbacks here, your risk marker now becomes the low pivot. If you're going to look to buy a pullback here somewhere, 86s, 88s, your risk marker is to the low pivot there down to about 82s. All right, so this is kind of how we progress throughout the morning or throughout the session. Is I highlight, what I'm seeing as risk markers. We always want to know where the risk points are. All right, and then we decide, what levels are key and functional for us, and then we'll look to take trades from those levels, and then it gets into another stage of what type of using order flow, those type of things that gets involved in there as well. All right, very good, Gamini. Thank you for that. All right, we're going to be closed Monday, everyone, by the way. All right, for the holiday, we're going to reconvene on Wednesday in our trading room. I don't think anybody's going to be trading Friday afternoon or Monday, so it gives everybody an opportunity to take a break and kind of recoup. Yeah, absolutely. Thank you, Patrick. Yeah, definitely, guys. All right, if you're kind of like on the fence of whether or not, well, I'll do it after the holiday or whatever, just sign up. All right, for the free trial. Again, 14 days. Like I said, like Patrick said, I'm not hard and fast on it. Okay, I'm very flexible. If you're expressing a lot of good interest, you like what we do. All right, and that's what matters. And if you needed a few extra days because you missed something because of the holidays, again, it's not a problem on my part. All right, so yeah, I'm very flexible along those lines. All right. Somebody had asked about what the light blue bars mean. So that's a good question. So what we want to do is identify, one of the key components of what we do is identifying when there's a potential for a trend type shift. Now, I don't like to use necessarily the word trend, but more I just like to use directional progressions. All right, intraday, we can have multiple different changes of direction throughout the day, but what the color bar changes here signify is that they're in the dynamics of trend, how we measure trend, direction, or dynamics of trend. That tells us that the prior trend, all right, is complete. So taking a look here at the S&P on the left, right? So the prior trend down, you see all these red bars, all right, and then you can see over here they start getting darker red, and then it transitions into kind of a light blue cyan color. All right, so this tells us that the downtrend dynamics are complete, at least at that moment. All right, so and then new dynamics are beginning now, favor to the upside. Okay, so again, that we actually refer to those as bull and bear stackers, and there's a whole, again, we have a whole webinar specifically devoted for these type of signals. All right, so they're, again, beyond the scope of what we're doing today, but in short, that's what they mean. Yeah, don't get too confused about that there's so many indicators, right, in our package. And again, they're grouped, all right, such that you take segments of them and they become much more useful in segments. I mean, we have a lot of indicators, but a lot of the indicators kind of overlap one another in terms of how they're used. All right. So again, all that is purely laid out, very easy to follow through the members area. The data provider we're using is Transact. Okay, through Infinity. All right, so the Transact, that's easy enough. Do you hold longer term trades more than a few points? Yes. All right. Again, a lot of how far we hold or what we hold or how we manage a trade, a lot of that is dictated on how the market's action is. All right. If we have a good position and we have multiple contracts, our first goal is to get risk free. All right. So if you're risking, say, 3 points, and you're in 3 points in the money, all right, you want to shed some contracts, and if you have multiple contracts, and all right, and then hold and begin and go into management mode. So you can get definitely multiple points, but again, the market's going to dictate that. The trade we took earlier here, all right, again, we were down near the lows or near the potential for a low. So though we took a short trade on the NQ here, I only elected to take the first target, all right, instead of holding it for multiples. All right. My position on that simply is, in the early part of the day, take some smaller gains. All right, those smaller gains, by the way, build up. All right, take a few points or a couple points or whatever it is, and again, I'm not a scalper. We're not scalpers here, but we do want to let the market work for us, and we want to take a reasonable profit, all right, for the risk that we assume. All right, you can see here prices got up to the 5,700. All right, I was looking around here 03s, but again, right up here 5,700, there's a little reaction. All right, and that's what is expected. All right, and as you can see here, for you guys that are familiar with divergences, all right, this move up, our oscillator had a negative divergence. All right, so there's a and that's, everybody's kind of interested in divergences, so there's a negative divergence there, which called for potential for at least a reaction off of that 5,700. All right. So again, if you recall, just a few minutes ago, I said I'm looking to sell 5,700 up to around the 03s. All right, and that's what I'll do for our members. All right. The shaded areas here are confluence levels of multiple different types of levels. All right, and again, they just adds a layer of a simple layer of a zone. And again, the expectation typically is we get some sort of response. Yeah, it is important that it stops and reverses in that zone. All right, again, that kind of adds validity to that area. Okay, I missed a couple questions here. Hold on. Yeah, so again, Richard, regarding to the membership trial, again, sign up today and you can enter when you want after the holiday. Monday will be closed. You can come in on Wednesday. We'll be open tomorrow, but tomorrow will be a shortened session for us on Fridays during the summertime. All right, but again, don't let that deter you. All right, sign up and come in tomorrow, and then again, come again back in on Wednesday, and then start your 14 days from there. All right, so don't worry about it. Hey Asher, how are you? Haven't seen you in a while. Good to see you. Okay, so let me give you guys the login for today. Do sign up for the free trial, but this will just be for today. All right, so try that link that I just posted in the webinar room and the password. All right, so that'll be for today. So go ahead and try that and see if you can access it. Okay, but again, definitely sign up for the free trial though, please. All right, if you're going to, because I need to have a record for everybody. Because every Monday, or each week, we give out a new password. Okay. So the volume profile here. Okay, so that's Mike asked about. I think Mike asked about the volume profile. So we have. Let me just expand this out. Okay, so here's the S&P. All right, and what I use for the S&P on the profile here, the footprint chart, is a 6-tick reversal. So every bar, every column stays in effect until there's a 6-tick reversal off the high or the low. All right, and the profile that you see on the chart is a session profile or a 24-hour profile. Okay, so it measures that particular session. In terms of, and I only want to see what's happening in this session on this chart. Okay, we'll look at bigger profiles for bigger picture stuff. And again, let me just pull that in. All right, so here's an example of a bigger profile, all right, of the NQ. All right, so again, this is not very useful, all right, intraday trading, but it is useful to get a lay of the land on a bigger picture, all right, and where the high and low volume nodes and things like that. All right, so we definitely use variety of profile configurations. Okay. Yeah, so the last big white arrow here in the S&P, that was a setup, okay, but it didn't play out, right? So had this one, we did not take this one, by the way, all right, because actually it actually had some strength to it, all right. So after the low was put in here, again, we had a little bit of like a double bottom low. When you get like a little double bottom low here, guys, all right, such as this, and you'll see it because it looks like a little, you know, triangle pattern, all right. When you get a little double bottom low like this, when you get that first move off the low, all right, it'll generate, in a case like this, it'll generate a premium, but we don't want to take that premium because it's actually a sign of strength. All right, that signal actually becomes a sign of strength rather than a pullback within weakness. So there are some differentials of what we look for. Okay, so though it was a signal, not every arrow gets an automatic trade. And again, this is all stuff that you will learn. All right, you will definitely learn throughout, you know, learning the methodology and understand what we look for. But not every arrow will get qualified for a trade. All right, but it gives you a quick visual reference of where there is a setup, and it will only show an arrow when the criteria for the setup we look for is valid. Let's see. Do we get access to the software during the free trial? No, Darius, the software, I'm not offering free trials to the software as a guest during the trial period. It's just too cumbersome for me to manage, to administer. What we do though is, if you decide after your 2-week period with us, if you decide you want to join as a member, we offer a 30-day free trial to test drive the software. So it's actually better, because what I want guests to do, everybody, is there's a lot of information that goes on, right? And the core of what, when you visit anybody, any educator out there, your goal should be evaluation of what they do. Does it resonate with you? Is it something you want to pursue? Is the style what you're looking for? It may not be. You may have your own personal criteria. So in order to do that, it's best to stay focused, just kind of sit and be an observer during the trial, rather than try to figure out software, and what to do, because it becomes a distraction. All right, so we don't want you distracted. We want you focused on what, your goal is as a guest. All right, and then if you decide you want to move forward, you have all the time in the world to test drive it. All right, let's see if we can get another trade on here. We've only had one normal trade. We had a trade opportunity for our members, and I know a number of them took this short up here, all right, against the 5700s. I got a couple private messages. They did take a couple shorts there, and so that's good for them. All right, as we were describing where to take trades. Again, a lot of times what I'll do is, it's very difficult to talk, trade, answer questions, and so forth. So hopefully you can appreciate that. That said, though, when we are focused in our room, I don't do as much talking, and I do much more focused trading as throughout the morning. What is the dollar value of a point in the NQ? $20, Mark. Yeah, $20, $5 a tick, I believe. Yep, 20 bucks. All right. Great, good to hear, Asher. Thank you. Do we trade the afternoons, Abe? Yes, absolutely. All right. Come on back, Abe. By the way. All right. You started off with us early in the program. Come on back. Yeah, we trade throughout the day, right till the close, cash close, 4 o'clock. I do take a break for lunch. Okay, good, Richard. Thank you. All right. All right, Brian Fell. Thank you. All right. Is there a trial on the daily trade strategy? Andrew asks. Yes. What I do as a guest, okay, I give everybody, excuse me, I give everybody a complimentary trial to the daily trade strategy. All right, here it is right here, and it's via email. All right, so we go through, and and it simply explains what we're looking for the day type, right? What we're looking for, and it gives us. I also give a chart. You can click on a chart, and what the scenario is. I give 2 scenarios, a bullish and a bearish scenario for the day. Okay, again, I don't know what's going to unfold, but I do know that probabilities favor an upside or a downside move if certain events occur. And so we give upside and downside scenarios, all right, to that. All right. Okay. Richard was able to get into the room, okay. No, I do not trade the DAX, not at all. I'm not up that early to effectively trade the DAX. All right, so I don't want to, yeah. So no, not something that we do. I don't trade gold either. Some people have asked, do you trade gold? No, do not trade gold. Yeah, when when you're trying to sign in for the free trial, you may need to download. Typically, you need to download a small little cookie of some sort, little executable file. Then the box should pop up. If not, just exit your browser and then try it again. You should be able to get in fairly easily then. All right, I don't think I missed anybody's questions. I think I got to everybody pretty readily. All right, while we're doing this. All right, do you get as many trades in crude oil? You know, crude oil has been a very good. You know, you can have as many trades simply as you want in crude oil. All right, and if you follow certain, you know, core rules that we look at. So here's an example. Somebody had asked earlier about the transition of the bars or the colors, and here's a great example. This is a kind of a classic example of what we call a bull stacker trend shift. All right. So as you can see here, that the price action was obviously, you know, pointing downward, had a downward lean. All right. When that price finally pushed up above the prior highs here, and then it consolidated temporarily, and you suddenly see these cyan color bars, this is what we call a pre-bull stacker. All right, so you'll see right in here, you'll see the little text. It says bull stacker. Okay, and the bull stacker actually occurs on the first bar that goes from bright blue to darker blue. All right, so at that point, that's where the bull stacker, this is where the entire trend now condition has shifted from downward, transitioning to a pre-bull, and then occurs right here where the X is to a bull stacker. So that is a trade setup for our members. Now, there isn't a specific bar or a price associated with that like there would be in a premium or a discount. But that is a core setup for our members. All right, so definitely, you know, the idea of looking to get onto a directional trend move early, our software does a very good job in identifying that. All right, after a down move. All right, and you can see here as well, this was kind of similar. This kind of looks like a little double bottom again that we saw like in the S&P. So that first move off the low of a potential double bottom, and then the first pullback. Okay, so again, members that are looking for this, right, you have to also, by the way, the software will generate that signal. All right, so you'll see here in the crude, all right, on the Scanalyzer, you'll see bull, stacker bull. Okay, and you'll see that signal generated, all right, back where the bars changed. Okay, so it will, if you have the audio alert on, it will tell you crude oil bull stacker. All right, you can't miss it. All right, now I don't have them turned on right here today, but so the software will give you the heads up. All right, as the signal is developing. As a member, knowing what to look for, again, part of the education, you'll actually be prepared for a signal such as that in advance. And as you see it developing, you'll understand, you know, what that means, and then you'll be able to take the appropriate action. All right. I won't sit there and call out a trade for a bull or a bear stacker. The computer does it for us. All right. So that's something, you know, to bear in mind. But again, the tools are all there for us. All right. All right. Very good against the 5,700 for our, some of our members that took that short. Again, I did not take that short there as I was speaking, but good show for them. And testing the lows here. So let's see if we can get another trade or two before we have to cut out for the day. Let me see. Oksana, yeah, go ahead and sign up for a free trial again. No problem. All right. Love to have you back if you weren't able to attend before. Okay. So the downside here is again reemerged itself. All right. We can see if we scale out a little bit here. It's just really a little bounce within the context of today's downtrend. Okay, so we don't really have, you know, a bullish shift. All right, so that's why we were looking for shorts. All right, on a bounce back up to the 5700s. All right. Would our system be effective for futures currencies? Yes, Mark. All right. Although I don't trade the currency futures, all right, it will work quite well on them. Might need a couple minor adjustments, you know, per, you know, if you're trading the, you know, the pound or the yen or something like that. But again, for the most part, it will be effective. All right, should be no problems. Again, remember, our methodology here is, in a sense, generic in terms of the instrument. All right, because what we've created here is it will apply to any actively and liquid type instrument, so no worries there. All right, good. I think I caught up on questions. Let's now see if we can continue to focus on getting a setup. So what we're looking for here on the NQ, right? Obviously, sellers are in control again, but we want to now look for a bounce in price, right? So a counter move to the current move. And what we typically look for initially is where you see this this kind of red zone here that's developing, the shadow area. That's called our fair value zone. All right. So what we'd like to see, if possible, all right, and we got to be patient for it. But if we get a bounce up into that area, all right, that would be an area where we would be looking to take a short on a bounce. All right. Again, I don't go chasing after price to the downside or to the upside. All right. If we missed the trade or we missed the proper entry, you know, or something like that, we missed it. That's it. All right. You don't go chasing. You know what happens, right, when the dog chases the bus? Right, the proverbial gets run over, right? Now you can see here on the NQ, right, as well as the S&P. See where the bars turned yellow? Okay. Again, that's telling us at that moment that the trend is shifting from bullish. You got blue bars, green bars, now you got yellow. You do not want to be buying that. You actually want to be looking to sell it at that point. Okay, so that is a pre-bear stacker. And then when the bars turn fully red, that is a full-blown bear stacker. You do not want to be buying that. As it's shifting, as you can see, that's where you want to be. That's the sell. That's the sell signal. To get, you know, the idea is to get on the new direction. All right. You don't want to get on the new direction way down here, do you? That's not a good spot to get on. So we're looking to get on when the market is in the process of shifting. All right, and a lot of people miss that. Our software picks it up quite readily. So at this point, unless you're on the short from 5700s or a break of the 84s here, all right, you do not want to be shorting them down here. So you have to stand aside. You say, okay, I missed it. Walk away. I'll wait for the next opportunity. All right. All right. Let's see if we can get wait for a bounce here. Now, I'm doing a lot of talking because of, you know, with questions. During the normal session, all right, we're all focused on looking for these type signals, all right, and taking appropriate action when they present themselves. All right, a lot of trading is sitting and waiting, and a lot of people, you know, get a little uptight when they have to wait, but again, that's just part of what we need to do. All right. All right. Any other questions? Let me know. Post them in. All right. Yeah, you get paid to wait. There you go. All right. We get paid to wait. We get paid to take the good trades, the valid trades. You're not going to get paid if you go chase something, and you don't have the proper, risk assessment on the trade, or if your risk is way too much. Now the potential for a bounce here. Okay, let me just reset the NQ. All right, the potential for a bounce here potentially is great. So if you short them down here because you're frustrated because you missed the appropriate entry spot, again you can easily get run over, and then we don't want that to happen to you. All right, so I'd rather be defer to just standing aside and waiting for the appropriate time. All right. No, I don't trade the gold market. A couple of our members do dabble in it. I don't. I never have. So but the method will work, and the tools that we have will work for gold. Right? It just all depends, what type of, if you like the gold market, if that's something that piques your interest. All right, the method will work just fine with that. All right, let's hopefully we'll get another opportunity here before we cut out. And even this on a webinar, everybody, it's great that you guys are asking these questions. And again, even think about this, this is why we give a 2-week trial, because you're not going to get the full flavor of everything we do or understand everything that we do, in a few days, let alone, an hour and a half webinar. Okay, so that's why we want you to have a full complement of time to evaluate, ask questions during your period with us. All right, there's no pressure, by the way. Okay, we're kind of very open in terms of what we discuss and why we're looking to take a trade and so forth, and there's no pressure ever for anybody to you got to join up, or you got to buy this, you got to buy that. All right, we let you make the decision. All right, and we're here doing what we're doing, and we love what we're doing, and we love people to be part of it, but you'll never get anybody to pressure you. All right, again, demonstration, openness, all right, transparency is paramount in what we do. There's too many people out there, as you already have come across, I'm sure you have, that there's just not the legitimacy of education. Trading is a hard business. Don't let anybody tell you differently. But it can be, you can trade it successfully, but again, with proper guidance and risk management. All right, so let's see. So in the ES, are you watching for a pullback to the shaded area 2728? Yes, MJ, for a resume short. Yes. So in the shaded area here, MJ asks, right around here with this, we have an ATR line. We have an ATR structure line. It's called ATR bear, and it's also right in that kind of that deep red zone. So if the market gets a bounce, all right, we'll be looking for a premium type condition. All right, and how do we know a premium is forming? So I'm asking that question. So what we'll see here, we'll use our oscillator, all right, down below, and what we want to see is we want to see the oscillator lines, all right, get above, all right, this upper area where it says premium. All right, and once the oscillator gets above that, the price then becomes in a premium type condition, and then we'd be looking closely for an entry level, all right, an entry formation, all right, for that condition. All right. So on the oscillator it says premium, discount, and then 200 extreme. So when you get above these fat red lines, the market has gone to an extreme, and there's a high potential for price to reverse. So we don't want to, we want to monitor where those extreme conditions are. Okay. All right. The NQ and F seem almost mirror to each other. One can lead, the other is generally true. Yeah. Again, when one thing I don't do, I don't have an open position in the S&P and the NQ at the same time. I'll look for, the reason why we kind of have them side by side is, they are highly correlated, clearly, but the rate of change, though, is different for each. The NASDAQ will definitely move faster. It will move further, right, in a shorter period of time, most time, simply because if you think about the components of it, they're high beta technology stocks, whereas the S&P is comprised of 9 different sectors, okay, and they're not as volatile, right? But they definitely will move in the same direction, without a doubt. They just will do so at a different pace. So if you're somebody that finds that a fast-moving NQ is just too fast for you, okay, and you're not making those decisions, crisp enough, timely enough, move over to the S&P. It's a little bit, a lot of times we refer to the S&P as a lead sled versus the NQ. All right. So definitely, I mean, again, you have your choice. It doesn't matter to me which one you trade. Yeah. So in terms of the software, we have it is mutually exclusive to the membership cost. All right. So the membership cost, you get quarterly membership, and you have all access to the education material. You have access to the daily trade strategy, and every day with me. Okay. So that's the active membership. And of course, you have access to me, at times off hours to help out. In terms of the software, that is separate. All right. Again, as a new member, you have access to it for 30 days. All right, free of charge. Yeah, you get to kick the tires, and then if you decide to, purchase it at that point, all right, we have a couple options. We have a lease to own option, and we have a discounted full purchase price option. So you have the ability to use it for a bit before you have to make any decisions. All right. We have some folks that do follow along with the software that I'm showing here in the room, but the issue with that, though, is number one, the connectivity issue. All right. I do not recommend anybody trading off of my charts that they're viewing in the room, okay, actively, because there's latency issues. Connectivity could shut down. You're not getting the feed, and again, so I always say what you're seeing on my screen, is about as close to real time as you can, but I would not trade off of them. All right, so use them as reference only. All right, and you want to make sure, if you have the software on your desktop, all right, it is something that you can actively use and have good connectivity with. So I just wouldn't, I wouldn't use that as the basis. All right, just something to think about. The Russell, I haven't traded Russell for a long time. We may trade it. We may get back into it. I haven't made any decisions along that. We'll see how it goes after it moves over to the CME. I know it was pretty cost prohibitive. So we'll see. I'm not adverse to it. We'll see. I don't have any decisions on it. All right. If there's enough, think about it. If there's enough demand, in the membership, if there's enough cross section that they really want to trade it, we'll do so. If it's not worth it, then we won't. So I kind of leave that up to the group, overall. All right. Yeah, the tutorials. So let me just quickly show you. I don't really have a. Yeah, there's no setup right now in the NQ. But in the members area, okay, of the website, there's all the tutorials, workshops, videos, documents. Okay, here's a quick snapshot of what you'll get in there. All right, I have over, we're up to 55 videos, okay, in the members area, and they're all specific topics. Okay, now again, don't let the number of videos, deter you. Okay, again, they're not long videos, and they're very specific in nature. So we want to make sure that our members are well versed on specifics of what we look for. Because I don't teach during the day. All right, we trade. We want to make our goals for the day. All right. I'm with Infinity, so data is not a problem. Others not with them will need to get Sierra and their own data. If you're not with Infinity, certainly, give Infinity a test drive. All right, Patrick would love to open up a demo account for you. All right, talk to you. All right, and see. We have a turnkey solution here. All right, everything that we do with Infinity. And what I offer on the software and the education and everything is all kind of linked together. So it's really a simplified turnkey solution. All right, I have worked with others that don't have Infinity and Transact as a data source. It's a little bit more cumbersome. We have to make sure everything links up right. But with Infinity and the AT platform and everything, it's seamless. All right, seamless. So it's definitely worthwhile, giving Patrick a call. All right, okay, MJ, thank you for visiting with us. What time do we start in the morning? Abe, we have a morning briefing at 9:15 a.m. Eastern Time. The room is open 24/7, though I typically begin posting charts anywhere around 8 o'clock Eastern Time. And I'm not actually, charts are open, but I'm not talking until 9:15. Yes, Robert, we call out trades that we do take, absolutely. All right. Another good resource for you guys to give you an idea of some of the trades that we have taken is located on our Twitter page. All right. So if you go to that link, twitter.com/Polaris Trading, okay, you'll see a number of, let me just kind of open this up a little bit. You'll see a number of snapshots, okay, of trades that we have taken, in the past. All right, and live trades. And so they're all there for us. This was a premium in the S&P the other day. All right, and we took a too short position there. Again, what I do is once we have a trade, we talk about it live, etc., in our room, and then once the trade is on and completed, I take a snapshot of them, and then I put them on our Twitter. And our Twitter page here acts as a real good resource. Okay, acts as a real good resource, for education and so forth. All right, we're currently, I think, up to like 3,000 snapshots. All right, 3,100 tweets, and most of these tweets, by the way, are just snapshots. Okay, I don't jib-jab throughout the day to the social community. right? I only highlight what we're doing, after our members have, primary opportunities here. All right. Do we swing trade? We do have some members, Abe, that definitely swing trade. What we do with swing, if I'm going to do anything on a swing basis, I use options. I don't. Futures right for me is primarily day trading. Right, win, lose or draw. Right, it's only for the day session. If I decide I want to take a position for a longer term, I'll use options. Though I don't really, guide any. I don't guide the membership uh, to swing trading itself. I mean, I don't give any swing trading signals. But if I do work with a few members, in that regard, one-on-one. So it's something that we do, it's available. It's just that we don't do it actively. Most everybody here is just win, lose or draw, day session, primary. Right. So Barbara here got a nice trade in the YM. Thank you, Barbara. Nice job. All right, nice job. Okay. All right, Mr. Market, give us one or two more here before we end. 64s. All right, so you can see that's where the last level up. So if we get a bounce up near 64s, this will be the next spot. And we just make our adjustments along the way. Now you can see, and again, not to regress here, but these were this bear stacker signal was a very good signal, all right, for members to jump in on. And again, it's core of what we do. And though there isn't a signal, on a particular bar, like we do with premium and discounts, right, where you'll see an arrow and a white bar, etc. Right, there's none of that on these type bars, all right, because there's nothing there to signal off of. It's just more of a conditional, type trade, right? I worked for a money manager. I was his trader. All right, we traded at a hedge fund, and he was. His goal was, when a situation like that, like say we're sellers, when we got a sell signal or a condition for a sell, he would just basically say, get on it. All right, and that was just short for just selling it at the market, getting on the beginning of the move. He wasn't waiting for a specific, bar to invite him in. All right, he says, just get on it. And so I knew how he wanted to trade, what he looked for. All right, and what I will say to you is bull and bear stackers are similar to the conditions that he looked for. And he was a very good money manager and made quite a bit of, he was very successful. But the goal was just to get on it. And that's the hard part for most traders. All right, they're waiting for that, one bar signal, and then many times there is no one bar signal, and it's just, but if you understand what the conditions are, all right, then you can get on the trade with under those proper conditions, and then just sit there and let the market work for you. All right. So we have some members, Carla, that trade YM. Of course, the NQ, ES, and crude oil. You can choose to trade whichever one you want. All right. Again, they all will trade very closely to one another, since they're correlated. The only in the analysis that I give, whether it's for NQ or ES, would certainly apply, all right, to the YM. What you just need to do is just make the necessary adjustment. Okay. So for the correlation here with the S&P and the NQ, for every 3 points, okay, in the S&P, so we kind of go things, and that's a harmonic number for the S&P is about 3 points, right? The equivalent number in NQ for 3 points is 7 to 8. So call it 8 points. So for every 3 points, it'll be 8 points, all right, because of the multiplier differential, all right, and to find out. So if I want to buy something or sell something 3 points pullback, well, I'm looking for about an 8-point pullback in equivalency in the NQ. So in the YM, you may be, I don't know what the difference is there. I'd have to figure it out, but maybe it's 5 points or something. I'm not sure exactly. Barbara may know, but again, you would just need to convert it to a similar, value. Okay. Okay. So Barbara says 5 to 8. So 5 to 8 as well. All right. That's how you would do it. I don't have all the contracts up here. I'm not going to put YM. The reason why I don't have YM up on is they're all contained in the S&P. All right, all those 30 Dow stocks are in the S&P, so we just trade one. But if you want to trade the YM because it's a little bit narrower on those 30, no problem. And I can help everybody make the necessary adjustments, all right, to be able to, you know, to trade the YM. Okay, deep low, that blew a lot of people out. All right, you can see when these deep lows, you get these quick, fast V tops and bottoms. Actually, more so bottoms. All right. All right, going back to the bigger picture here for a moment. All right, I had mentioned earlier that if the price broke 62.50, the prior low in the NQ, all right, that we had lower targets that measured down to about the 38s. Okay, so here you are, the low here on the NQ at 35.50. All right, so the price did in fact, once it broke that 62.50, it accelerated, all right, down to the lower target. So that was already established for us in advance. So that's what we were saying earlier. Should the market come down and break down through the low, all right, again, the expectation then would be to accelerate lower, and we had established targets. Now look what's happening from those levels. All right, we're getting a snapback type move right now. Okay, so again, having these levels in advance, and these, by the way, the levels that we have historically are very accurate, but having these levels in advance and knowing what to be prepared for. Part of good trading is being prepared. All right, all right. So that's it, guys. All right, what I want to show you lastly is, again, come in for a free trial. You got the link. All right, and okay, again, 14-day free trial. All right, there's the link, and again, it's posted in the room. We'll repost it there in a minute. Patrick will probably repost it for us. Come in, take a look. Again, even if the holiday's coming up, get on board for the free trial. Come see what we're doing more so daily. All right, you'll get a free complement to the daily trade strategy and a full 14-day, complimentary, more so than a typical trade guest would have for a trial. So come in and see what we're doing. All right, I'd love to have you. We got a lot of good things, going on here. If you need to reach out to me, david@polaris-trading-group.com, or contact Patrick, all right, over there at Infinity, and for any additional information. All right. All right, I'm going to pass it back to Patrick. Thank you very much, everybody, for attending. I hope you got something out of this, and we look forward to having you visit with us and learn more about what we do and see if we can help you in any way, help you become more consistent, profitable traders. All right, and we'll give you a good education of how the market unfolds. All right, thanks, everybody. I appreciate it. We'll pass it over to Patrick. Thanks, Patrick, and you can take back the screen.